Dear students, welcome you to CMA session 16, problem number 6, preparation of cost sheet. Information regarding the various expenses as well as opening and closing stock of a firm is given here. Now, you can see here the opening stock of materials, opening stock of work in progress, purchases is purchase of materials, direct wages, factory supplies, trade magazines, manager's salary, depreciation of furniture, debenture interest. So debenture interest is a financial item which will not be included in the cost sheet. Sales, the number of units, 15,000 units as well as the value 3,15,000. Finished stock insurance, delivery van expenses, sales office expenses, showroom expenses. So all these items relate to the selling as well as distribution. So these come under the selling and distribution overheads. Donations. Donations are appropriation of profit, shall not be included in the cost sheet. Stores expenses, materials handling. These relate to the materials which are used in the factory. So these are factory overheads. Loss on sale of office furniture. This loss is a financial charge which is not related to the production. Hence, it will not be included in the cost sheet. Cost of defective work, coal, gas, and water. These relate to the manufacture. So these are factory overheads. Audit fees relates to the office or the general management. So audit fees are office overheads. Goodwill written off, underwriting commission. These are again financial charges which will not be included in the cost sheet. Interest on bank loan. As per the cost accounting standard issued in the year 2014, interest on bank loan taken for productive purposes can be considered in the cost sheet. So this can be considered in the cost sheet as other financing charges. Legal charges, that is, these are the charges paid to the lawyers. So these relate to the administration. So these are office overheads. Samples and packing relate to the selling and distribution overheads. We have information about the closing stock of work in progress as well as the closing stock of finished goods 1000 units. So we need to analyze the various items given here. So one by one we have seen now. We have materials, work in progress, purchases of materials and direct wages. Then information regarding the various overheads. It may be factory overheads, office overheads or selling and distribution overheads. At the same time, we have certain information, data regarding the donations, then goodwill written off or underwriting commission or debenture interest, such items which are excluded from the cost sheet. So an awareness of which items will be excluded is very important. Now, first and foremost, we need to find out the number of units produced. Now, if we have the information regarding the opening stock of finished goods, closing stock of finished goods and sales, we can find out the number of units produced. So sales 15,000 units and the closing stock of finished goods 1000 units and the opening stock is nil. What does it mean? Last year's production which is remaining is not there. It is nil. We do not have opening stock of finished goods. Whatever we have produced relates to this year itself. We have sold 15,000 units, which means we have produced it. At the same time, we have not sold 1000 units. Closing stock of finished goods remaining is 1000 units. So the number of units produced is equal to sales plus closing stock of finished goods minus the opening stock of finished goods. So 15,000 plus 1000 minus 0. We don't have opening stock of finished goods. So the number of units produced are 16,000 units. Now to begin the cost sheet for the year ended, units of production. We have calculated it is 16,000 units. The columns, particulars, the inner column, units, total cost and the cost per unit. And all this calculation will be done in the inner column and then the total amount will be written in the total cost column. To begin with, we need to find out the prime cost. So prime cost is the sum of direct materials, direct wages and direct expenses. Raw materials consumed. You have information about the opening stock of raw materials 15,000, add purchases 97,000. If we have incurred any expenses relating to the purchases of materials, that has to be considered here. So in this case we do not have that information. It said purchases of materials only 97,000. 1,12,000 less closing stock of materials. What does it mean? We have not used those materials, they are still remaining in the factory, so it's not available. We do not have closing stock, so it means that whatever we had stock at the beginning as well as the purchases made during the year are consumed. So the total is 1,12,000. The number of units are 16,000. 1,12,000 divided by 16,000. The per cost per unit is rupees 7. Direct wages. Direct wages are 96,000. So we write this here is the total cost 96,000 and the cost per unit is 6 rupees. So direct expenses information is not given. So only these two items are here, direct materials and direct wages. Add these two items 1,12,000, 96,000. So the prime cost is 2,08,000. 2,08,000 divided by 16,000. The cost per unit is 13. Now we have to add the factory overheads. So factory overheads means all the indirect materials, indirect labor and indirect expenses incurred in the factory for the purpose of manufacture or production. So we have looked into the various items here in the question which is given. So that we have factory supplies, stores expenses, material handling, cost of defective work, coal, gas and water. So when we look at these items, we know that these are all incurred in the factory for the purpose of production. So all these are written here. The total is 33,200. We have the opening stock of work in progress. That is 14,000 rupees, which is last year's work, which is pending, which will be completed during this year. So 47,200 less closing stock of work in progress. So there is this work in progress work which is not completed this year minus that will be, it will not be considered for finished products. So 15,200 is deducted, so you get 32,000. 32,000 divided by the number of units 16,000, so you have 2 rupees. So prime cost plus factory overheads, get the factory cost. So factory cost is 2,40,000 divided by number of units 16,000. The cost per unit is 15 rupees. To the factory cost we add the office overheads. So office overheads as we are looking into are all the indirect materials, indirect labor and indirect expenses incurred in the office for the purpose of the administration. So trade magazines, manager's salary, depreciation of furniture, audit fees and legal charges. All these are considered here. The total is 24,000. Per unit is 1 rupees 50 paise. 24,000 divided by 16,000 is equal to 1 rupee 50 paise. So when we add these, we get the production cost. So the production cost is 2,40,000 plus 24,000, which is 2,64,000. 2,64,000 divided by 16,000, 16.50. Now we have to adjust the opening and closing stock of finished goods. Add opening stock of finished goods. No, we do not have opening stock, so nil. Plus closing stock of finished goods. Closing stock of finished goods, it's 1,000 units. Now, how do you find the value of closing stock of finished goods? 1,000 units multiplied with the current cost of production. What is the current cost of production? 16.50. So 1,000 into 16.50, 16,500. So you can see here in the units column, it's 1,000 units and in the total cost column 16,500. So what we get is production cost of goods sold. Production cost of goods sold. It is 16,000 minus 1,000, 15,000. 2,64,000 minus 16,500, 2,47,500 is the production cost of goods sold. So the per unit cost is 2,47,500 divided by 15,000, 16.50. Now, to the production cost of goods sold, selling and distribution overheads are added. So finished stock insurance 2400, delivery van expenses 3500, sales office expenses 2800, samples 2500, packing 1600, showroom expenses 2200. All these are the indirect materials, indirect labor, and indirect expenses incurred for the purpose of selling and distribution. So the total is 15,000. Per unit cost is 1 rupee. Now, other financing charges. So we have this interest on bank loan, which is 1,500, and the per unit 0.10. Now, when we add these items to the production cost, we get the total cost. So the total cost is 2,64,000 and the number of units 15,000. So 2,64,000 divided by 15,000, 17.60. Sales figure is given. Sales is 15,000 units and the value is 3,15,000. Per unit is 21. Now, sales minus total cost will give you the profit. 3,15,000 minus 2,64,000 is 51,000. 51,000 divided by the number of units 15,000 is 3.40. Now, this is how a cost sheet is prepared and the profit is found out. So, to begin with, direct materials, direct wages, got the prime cost, and to the prime cost, factory overheads are added and the work in progress is adjusted. We got the factory cost. To the factory cost, office overheads are added. We got the production cost, and to the production cost, opening stock of finished goods and closing stock of finished goods are adjusted. We got the production cost of goods sold. To the production cost of goods sold, selling and distribution overheads as well as other financing charges are added, we got the total cost. Then we know the sales, and from the sales we deducted the total cost and we found out the profit. Dear students, if you have any doubts regarding this, do ask me.